Welcome back to my channel. In this video, I wanted to talk about Citi. And Citigroup is a diversified large bank. It happens to be, in my opinion, the best discounted large bank that there is out there. And the second half of 2025 may be set up for these banks to do really, really well. And there was a banking review to see how they're doing based on the regulation that's imposed on them, and they all did well. And the government is removing some of the regulation that forces them to have certain reserves based on the amount of loans they have out. The intent is to avoid another financial crisis like the one we dealt with in 2008. Having said that, the banking industry is expected to do much better, and Citi has already been doing well. I wanted to take a look at Citi. We're about 2 weeks before they announced their earnings, but this is one of my plays for the second half of 2025, and I'd like to tell you why I'm now adding shares to Citi, my valuation of the company, why I think it's going to do well for the second half. So let's take a look at Citi and see what they have to offer investors. Citi is a $164 billion market cap bank, and they are a fraction of what JP Morgan is, and provide a really nice valuation. Their current price to earnings is 13.95, not very high, and then the forward P is 11.49. Analysts think it's a good buy, but it's fairly priced. Okay. Um, Overall, the stock's done well. Year to date's up 25%, and they pay a 2.5% dividend. Hey, that's really good. Combined, that's probably 27%. The 1 year, it's up 36%. That's doing really well. So mission accomplished with Citigroup. As we look at the bank, their net interest margin is not growing very fast, but that may change if they remove some of the regulation and allow them to make more loans. That could really improve. Their overall revenue has been doing well. It's in the green. And we got a jobs report today. The jobs report was fairly good in my opinion. So Citi is probably looking at an economy that's doing okay, maybe even doing well. So that combination, the lowering of regulation, those things are going to help Citi grow a little faster. As I value banks, I don't look at free cash flows. I look at earnings per share and the growth of book value, and I'm going to show that to you a little later. In the meantime, let me show you what analysts are saying about Citi. 14 analysts cover Citi, and they believe that it's an investment. Some of them are quite bearish about the stock, saying, hey, this is a $67 stock. And some are bullish. Hey, this is a $110 stock. I'm probably closer to the bulls on this one, and I'll explain later. Now, what I like about stock analysis is they provide a forecast, and this is kind of a consensus forecast. Many analysts are weighing in, and we're taking what in essence is the average. And for this year, they're supposed to grow their revenues really well. Now, if they come in with this type of growth, there's no if and buts about it. This stock's going to fly up. And look at their growth on earnings, profits. They're going to grow by 25%. And what's good about a profitable bank right now is that we have an administration leading the country that doesn't frown on business success. They actually celebrate it. And I would say that in previous administrations, or I should say there's some people in government leadership that just badmouth the banks all the time. It seems like the banks are the usual suspect that they really beat up. And you know what? They're politicians. They're going to do that to please their constituents that, hey, look, I'm giving the big banks a hard time because big banks tend to have a bad name out there with the citizens. Overall, though, I think if Citi profits this year, next year, and the year after, they're not going to have a lot of ridicule from the government, not at least from the White House. And right now, the Senate and the House are led by pro-business people. So overall, I just think this is setting up really well. How desirable is Citi? Let me answer that question and give you an evaluation of where they sit in the marketplace of big banks. So overall, I think Citi is partially in the green, making them a very desirable stock company, and then partially in the gray. And the reason why they're kind of straddling both quadrants is they have an ability to compete because they're a big bank. I think that they're competitively strong. They have a strong network power. Internationally, they do really well. Their balance sheet's good. And their revenue growth is going to be really good, but I'll give them a B for now. Their profitability is good, and their book value growth is best in class. And I'm going to show that in a little bit. So they're not straight A's, so I'm reluctant to put them completely in the green, and I put them halfway in the green, halfway in the gray. An investment like this would require that I get a reasonable, maybe even a compelling discount. Now, what would be completely in the green for a big bank would be like a JP Morgan. They have proven to be an excellent bank that grows book value, grows in greater proportion than its competitors, uh, great brand, great network power. All those things are addressed. I used to be a JP Morgan stockholder. I'm very happy with the return I got. But that stock price got too expensive, and I thought that I could get better value elsewhere, and I moved my investment from JP Morgan to Citi because it's great to flourish with a bank, but sometimes if you stay in an investment too long, you may end up regretting it because maybe that investment just kind of goes flat or maybe it loses value. So I wanted to avoid that. I don't regret moving from JP Morgan to Citi so far. I think Citi's actually outperformed JP Morgan over the last year or two. So looking at the valuation for Citigroup, the overall discount on this stock is 28%. And I get there by valuing the company two ways. One is trying to determine the value of the company based on its book value and looking at the industry average for large banks book value, then pricing the stock based on book value. And the other is by looking at earnings per share that I expect from the bank. And overall, the stock really prices well. It's a good discount. They pay a dividend. They've been performing well. So overall, Citigroup's a good buy for me. I've been planning to buy shares. The only problem I have is the stock keeps going up. It's hard to buy into a stock that just keeps going up and up. But there'll be opportunities. I'm sure this market is not done with volatility. I'm sure we got some pretty negative days ahead. Now, comparing Citi to other banks, I cover banks, and when we look at Citi, its PE ratio looks good compared to others, but it's the book value that really, really looks good. Price to book is when you compare the stock price to its book value. It's 0.85. You want this as low as possible. You can see that they are best in class, and JP Morgan's gotten expensive. That's why I left JP Morgan. That book value really means a lot to me. So overall, I think, Citigroup is a good place for me to be, and I'm going to be buying shares into Citigroup. So that is my video on Citigroup. I hope you found it interesting. I also hope you're making a lot of money in the stock market this year. It's been a super interesting year, and a year where if you had capital to use in April, boy, you made a lot of money buying into the right stocks. You can also make a lot of money holding stocks, and that's been proven year after year after year, and that's what this channel is all about. So thanks so much for watching. I hope you liked the video, and good luck to you.